Hello everyone and welcome back to episode 6 of my investment journey. Today I'm going to be investing 1000 euros as always, and then we're going to look at what happened in the markets. So let's go right ahead and make the trade. We have here my MSCI emerging markets. I have a product by iShares and I have a little bit more than 1000 euros available. And I'm going to put in 1000 euros. Let's review the order. Looks good. And there we go. Let's see if it all worked out. Refresh. And perfect. Yes, we made the trade. We're up to more than 6,000 euros in the position now. And let's check out how my portfolio developed. So on a weekly basis, it looks like it went down a little bit. So we ended last week a little bit up. Since then, it's mostly going sideways. And then yesterday it went down a little bit and today up again. But by and large, it's really a sideways movement. And I think it has been going on like that for pretty much the entire month. Okay, so quick market update before we get into the storylines of the week. As you may know, I make my trade on Friday morning. But that's not when the markets close. Actually, there was some development in the markets after I made my trade. So here you can see the chart from Friday, and this is when I made the trade roughly. So here you see my portfolio at 5,000 and then 6,000. So this is where I made the trade. And then the market went sideways a little bit, and then in the afternoon it sharply turned downwards. So I ended the week in the loss column, and also my weekly performance is negative. So we're down about 1% overall. Very interesting. So let's look at it. Overall, the MSCI World and the MSCI Emerging Markets, they ended in the negative zone, and the pattern is pretty similar for both. During the week, we saw an increase, and then at the end of the week, we saw a sharp downturn. And yeah, that's what I found interesting. Overall, across the countries, we see a mixed picture actually. So let's get into some of the storylines. I analyzed them already here, and you see the good, the bad, and the ugly already with my markup here. But I tried something new here and tried to ask ChatGPT to summarize this for me and give me a movie title that summarizes the week. And what it gave me was The Great Rate Shift. And the reason is because global markets were driven primarily by diverging central bank paths. So the US Federal Reserve cut interest rates while Europe and Japan leaned towards tighter economic policy. And then also across other regions, the performance was mixed. Some markets were up, some were down, and policymakers and investors remained cautious and selective. So just to get into some of the storylines here, the US stock indices rose to an all-time high due to the Federal Reserve's interest rate cut. But then, at the end of the week, the S&P 500 pulled back sharply. And one of the drivers might be renewed concerns regarding tech stock valuations. Oracle came out with their quarterly earnings and they were worse than expected. And so they are seen somehow as the canary in the coal mine. If they struggle, maybe the whole AI bubble is once again closer to bursting. But yeah, the Federal Reserve wasn't looking so much at that, but more at the labor market. And there seems to be some risk for downside developments. And so they cut the interest rates in response to that, or maybe in anticipation of a worsening of the situation. Europe is mixed here. Overall, the ECB could upgrade its growth projections, so that's kind of positive. But then, on the other hand, they say maybe no more need for rate reductions is required. And those are the two opposing forces. If the economy goes well, typically good for stock markets, but if the economy is going well, then you don't need to cut the rates anymore. And not cutting the rates is something that is a headwind for stocks. So you can never know really how markets react to improved growth projections or rate changes. It all depends what the market has already priced in. And interestingly, here we see this with Japan. So Japan's stock market rose, even though, if you remember, there was this discussion that the Bank of Japan would increase the rate. And here it says markets already overwhelmingly priced in the likelihood of a rate hike. So even if it happens now, nothing will happen in the stock market, all things being equal, because they already anticipate that this is going to happen. The only other thing that I found interesting here with Japan, and I saw this already a couple times and it surprises me all the time, is that the GDP contracted an annualized 2.3% in the third quarter, and that's worse than the consensus estimate of 2%. And that's kind of crazy, right? So the market already expects a decline. I think that this has to do with their demographics. They have no immigration or virtually none, and a very much aging population. And so we can just assume that their population will shrink. And so the GDP decline seems to be built in already. Yeah, then emerging markets, here we have China. In China, investors seem to have taken some profits after recent months gained. Also, what we see here is deflationary pressures on China's economy. And that's really bad. If consumers, for example, anticipate that prices are gonna go down, then why spend? Just wait for the prices go down. It's like the opposite of inflation, and a lot of economists will say this is even worse than inflation. So the consumer price index actually increased 0.7%, but the producer price index fell 2.2%, and that's the 38th month of declines straight. Okay, that's crazy. So since the pandemic ended, there were deflationary pressures in China. And that's pretty mind-boggling. And there's actually even a term for it, which is called involution. So Google that, it's very interesting. I think the story is that all of those companies, they're competing with each other, and it's such a fierce competition that they cut prices relentlessly. So no company makes a profit anymore, and it's just like, a game of chicken, who chickens out last, who can take the losses the longest. And so especially if you look at this electric car market, you see that a lot of them are offering very cheap models. There's so many companies in this space, and they're really in a hard competition. Okay, then we have other markets. Just briefly here, we got Turkey. Just as an interesting example, how economies can be in such different states. So here, the policymakers reduced the rates as the inflation trend declined. Turkey is in a crazy inflationary environment, and now policymakers cut the rate from 39.5% to 38%. Both of those numbers are ridiculously high for us, but for them it's already a mild success. And also third quarter GDP the growth was higher than expected, so it's positive. And then you got Brazil, where you see that the interest rate remains at 15%, and positive news, moderate economic growth, and modest improvement in the inflation rate. Still above the target, but that's about it. So I think it's quite accurate what here ChatGPT summarized for me. Very mixed signals across the board, but you see again, central bank play a huge role. All right, so much for this week. If you want to follow my journey, hit the like button, subscribe, hit the bell, and I see you next time.